Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we are getting an update on Cerrado Gold. Cerrado Gold is traded on the TSX.V under the ticker CERT and on the OTCQX under the ticker CRDOF. And I'm joined today with the founder and CEO of Cerrado Gold, Mark Brennan. Mark, great to get you back on the show. We had just chatted last month doing a nice overview of all three projects. Well, one of the projects is in the middle of an acquisition that you'll know on next week, but you got projects in Argentina, Portugal, and also in Canada. So a lot going on with the company. There's a press release that you put out to the marketplace, though, just on the 30th of April, and it really digs into your Q4 numbers and financials. And so I want to dig in there and maybe start there with a look back at last year. Last year was really a transitional year for Cerrado Gold on many fronts. On the acquisition front, getting payments and sale of an asset. There was a lot going on last year, but you're still making a lot of money at the gold prices we had last year. I can only imagine how that's going to improve in 2025, considering where the gold price is today. But let's isolate it to Q4 and 2024. What are the key takeaways you want investors to know from the financial health of the company looking back at 2024?
Thanks for having me on again, Chad. Great to chat. I guess in terms of, Q4 2024, we closed off the sale of our MDC asset. We received a bunch of cash. We paid down a lot of debt. Our working capital deficit was reduced by $55 million. We currently have a working capital deficit of $12 million, which for our growth and income stream is very de minimis. So we're now in a very, very strong financial position. And with gold prices trading around $3,200, $3,300, we're making a lot of money. So where we've seen the greatest features of Q4, one, very strong financial stability. We're now a very solid financial driven company. Cash flows from operations are ramping up very aggressively. And, we're looking to drive growth moving forward as we move into 2025.
Well, and one line item on here that I think it's worth highlighting is that on the asset sale of the Monte de Carmo, you did have a lot of that money come in last year, but you still have about 15 million that's still guaranteed to come in the future. So maybe break that down for people that there's still more capital coming into the company from that asset sale that's expected.
Absolutely. We still are owed $10 million in June of 26, and then we're owed another $5 million in March of 27. So we still have another $15 million to come in from that asset sale. We also have another $10 million that may come in through the option sale of Michelle to Anglo Gold last year. And we think that if that's going to happen, it'll probably happen in 2026.
Well, and just one more quick follow-up on the debt. Some people had knocked Cerrado Gold maybe a year back saying, like, look at all the debt that they have, but you've made such a huge advance on paying it down. Maybe to speak to where the net operating capital is at this point in time, the debt that you repaid last year, how much is left? Just give people a sense of that.
Basically, again, on the working capital front, we've brought it down from about $70 million down to $12 million. We'll still have some residual debt, probably about $9 million of longer term debt to be paid in 26, 27. However, as we put in a press release earlier this year, our expectation is even with the acquisition of Ascendant, paying for Ascendant going to production decision or construction decision, paying for the feasibility at our Quebec iron ore project at Mont Sorcier, we still anticipate finishing the year with at least 20 million of cash. If prices stay up where we are today, we could be up an additional 50% or so. So we should be in a really strong cash position by year end, net debt free.
Yeah, it's the strongest financial position the company's been in a while, so it's really nice to see, Mark. Let's now talk operations, though. At Minera Don Nicolas, you've had a good year last year, around 55,000 ounces of gold equivalent ounces, 54,494 to be exact, and you're estimating around the same kind of production profile this year, although we'll have a higher gold price. Give us a sense of how some of the operational inputs, though, are going to be changing because you're changing a little bit of what was going on to the leach pads versus the CIL plant and then bringing in underground mining. So give us a sense of how at Minera Don Nicolas, how the production profile will be augmented from these different areas.
Indeed. What we've seen is conventional open pit resources depleting over the course of the last year and really depleting in the beginning of this year. And what we have been focused on has been really driving the heap leach operations. The heap leach operation are now We're hoping to be running between 4,000, 4,500 ounces per month. And then on top of that, we're starting, as you mentioned, underground operations in June. We'll start the drilling to get in underground. And from that perspective, we see really strong potential to be producing in the second half of the year from underground. Now, the important thing with the underground operations is not only that we'll be producing high-grade gold, which is probably anywhere from 8 to 12 grams per ton, but also it gives us a window, it gives us the opportunity to start drilling underground for exploration. It's way too expensive and way too complicated to drill from surface, but now that we're going to be underground and entering from the bottom of the Paloma pit, it's going to be a lot easier to put drills in and drill substantially deeper than where we've been looking. And I'll just remind people that we currently have a resource underground that's open at depth. It's open to the east, west, north, south, so it's open in all directions. And we really strongly expect to see some good upside in terms of our resource and mine life coming from the underground. Conventionally, all the other major players on the belt, whether it's Anglo, whether it's Newmont, whether it's Pan American or Hochschild, basically they have made their focus of being underground as opposed to open pit. And that's what we're looking to capitalize on starting this summer. We also do have an extensive conventional open pit exploration program starting in June as well. You'll see the drill rigs turning, and it's an aggressive program. We'll be spending a lot of money, and we expect to see a fairly good addition to our resources. We're targeting between 300 to 800,000 ounces for the program. So from that perspective, that would really extend our life of mine beyond the kind of current 4-year mine life. And I think that would really bring and drive a lot of value for shareholders.
Well, and just maybe one more follow-up on that. A lot of these larger mines that you mentioned in reference on the trend, they're kind of like the flower at top is the open pit, and then the stem and the plant is the underground mine, and they become long life mines. They become a lot of millions of ounces produced. What do you think is possible here for people just as the blue sky upside at depth, now that you can get underground and you can drill it off and it's shorter holes, more accurate hole, more cost-effective holes? What do you think is possible based on what you're seeing as far as a mineralized signature on what you do know is underground?
What I would say is that our signatures are very similar, and our operations are very similar to Anglo. Cerro Vanguardia, which is just to the south of us, obviously they've outlined 8 million ounces over the course of the last 30 years. If you look at Newmont and Cerro Negro, they've outlined around 7 million ounces over the course of the past 20 years. So the reality is that we are the new kids on the block. This project has had very little exploration. We've been on the company has had its existence on the belt for probably less than 5-10 years in terms of exploration drilling on the project itself. So we're very, very new to the block, but I don't know what's possible. Can we be the same size as Cerro Negro or Cerro Vanguardia? We don't have any proof that we can't be. And that's the most important thing for us, is that, until we start ruling things out, we still have the optimism, we still have the belief that there's no reason why this project can't be the same size as those projects. So, that'll take some work, it'll take some time, but we're very excited to start that journey. And again, I'm very confident that there's going to be a lot more ounces found on our property. We have one of the biggest properties on the belt. We have about 330,000 hectares, which is probably about the size of Rhode Island. It's a very, very big project. So from that perspective, we don't expect all the property to be gold bearing, but at the same point, we see lots of opportunity to expand our resources here.
Well, we'll definitely keep tabs on Minera Don Nicolas as it continues to expand and grow and shifts to an underground mining scenario. Let's shift over, though, to Portugal. You got the big vote coming up next week on the merger of Cerrado and Ascendant. And this Lagoa Salgada project, we've talked about it before, but just remind people, it's a polymetallic deposit. You've got silver, gold, zinc, copper, and lead, and tin. But it's a monster of a project, and it could become the next big development project for the company. So give us a nice snapshot of what you expect to do in the timeline for 2025 and 2026, providing everything goes through as planned.
Sure. I mean, Lagoa Salgada, first of all, with gold prices where they are today, 44% of the production is coming from silver and gold. So with pricing of precious metals where they are today, it really now has a much higher focus on precious metals. That said, what we're looking at is a polymetallic that on a historical basis had an NPV of about $145 million. we're expecting with some of the new developments that have taken place there that will be probably somewhere closer to $200 million. On top of that, historically, we looked at it as a zinc project, and it was one of the lowest cost producers of zinc. So that'll continue. We'll be a very low cost producer of net zinc. And then on the back of that, we're seeing tremendous increase in value from the improved metallurgy, where we've seen higher grades, increased recoveries. We've seen reduction in costs. So all in all, that this project is starting to look really strong. And just as down in Argentina at Minera Don Nicolas, this project has not been drilled substantially. So we think this has a lot more room to become bigger as we move forward. And just like we were doing in Minera Don Nicolas, we have a foundation of solid cash flow coming from the operations, while at the same time looking to grow these assets to be what we potentially think could be world-class assets. They're not there yet, but they certainly still have the potential. And we think that Lagoa Salgada in Portugal has the potential to be a world-class asset, like its neighbor. If you look at Neves Corvo, which is now owned by the Australians, the reality is that this project could be one of the biggest projects in Europe. So from that perspective, we were very optimistic for what we're looking to grow forward with.
Well, and give us a sense of what kind of capital that you need to put in place to develop the project. What kind of timeline would you be looking at?
We're looking for a permit, the first and most significant environmental permit to be announced in the next 2 weeks. We're looking for a feasibility study, an updated feasibility study to be completed, let's call it in July. And then on top of that, we're looking for potentially a construction decision in November. So, we could be potentially in construction in the first quarter of next year. As you may recall, we have the strong support of the UK Export Credit Agency to provide us with 70% of the capital that's be required. They're working with Santander Bank out of Spain. On top of that, we've got Sprott, who are prepared to provide us with an additional stream if we require. And on top of that, with the cash flow that we're generating out of Argentina, we should be in a very strong position to bring this project to production without a great deal of dilution to shareholders. And this project, under the old regime, under the old feasibility study, was looking to generate about $75 million per year. I would be disappointed if this project doesn't throw off north of $100 million based on our new feasibility. So we're able to generate, a long life asset with strong cash flow generation with what we hope will be very, very minimal dilution.
Mark, because this would be a significant project in Europe, to the point you just made, do you think there's any potential funds you could get for the critical mineral side of it? Because there is copper in it, there is tin, you do have zinc. Is there any potential there to bring in some of those government funds just to help advance it as a key project of significance in Europe?
Absolutely. We're being approached all the time now. It took us a little while to get there, but Europe, the European community, the business development banks, of Europe and of the EU are knocking on our door. Actually, we're starting an a program that's called Undercover, where they're looking at three different mines or three different projects to use the most sophisticated underground geophysics techniques. And basically, they've chosen Lagoa Salgada to be their more significant project that they're going to be working on. So the importance here is that, again, we anticipate that we'll start to see a lot more benefits coming to us. Obviously, we're looking for solar power generation in Portugal because it's a very successful mode of electricity in Portugal and Spain, obviously. And we're looking. The governments are looking to give us grants and subsidies, et cetera, for that production. So indeed, we're seeing a lot more attention coming from the EU as well as the respective governments of the EU as well.
Well, definitely something we'll keep following along with, and just wanted to check because it seems like it's the kind of project that would be in the crosshairs of some of those different policymakers, and it sounds like it absolutely is. So definitely keep us posted as things progress there, and good luck with the vote next week. One other project we got to weave in here, though, is Mont Sorcier in Quebec. This is your iron ore project. What's interesting is you just put out some news on May 1st about the metallurgical work and where the NPV is of the project at a PEA level. And it's a US $1.6 billion NPV. So I think it's more significant, this iron ore project, than a lot of people realize as far as just the value that's sitting there, the optionality. What would you like to say, Mark, about Mont Sorcier and this news that you just put out on the 1st?
Well, I'd say that like Mont Sorcier is a great long-term option for us, and it's the equivalent of about 300,000 ounces of gold with a very low cost. We're looking at about $45 per ton all in, where we could probably sell the iron ore for about $120 or so. So we're completing a feasibility study between now and the end of the first quarter of 26. That's moving along very well. The project has become a high purity, high grade iron ore project, or DRI project, which is what everybody in the iron ore world is looking for right now. What you're going to see with DRI product is that probably they'll be used 10% of global supply will use this product in order to blend with conventional iron, lower grade iron ores. And the reason they do that is because it'll reduce the global footprint of the iron ore industry. If you look at the iron ore industry in general, it's growing at around 2% per annum. The DRI business is actually growing at something closer to 9 to 10% per annum. So it's in great demand. It trades at a good premium to iron ore. And this is a simple, easy project. We've got 1 billion tons. The NPV, as you mentioned, is about 1.6 billion based on a PEA that we did in 2021. We think that PEA is still pretty relevant. There'll be some inflationary components, but the upgrade in our quality of our material will more than match that. This project will probably cost us somewhere in the region of 600, 800 million to build, of which basically it should throw off about 350 million of cash flow and about 250 million of free cash flow per year. And just like in Portugal, we have the support of the UK government. The UK Export Credit Agency have agreed to support the project up to 70% of the total capital required. We're working with TD Bank on this project, and we're all very excited. We're just looking forward to the new government coming in and removing a lot of the restrictions that just makes the timeline for bringing projects to fruition somewhat prohibitive at the moment. And hopefully the new government will come in and remove a lot of the prohibitions that have just extended timelines for projects. And that'll be a really strong advantage for the project. But it's a wonderful project. It's a great project. And, it's going to be a moderately easy project to develop.
Yeah, looking forward to seeing if those permitting timelines and some of the regulation gets debottlenecked with the new administration coming in and some of the emphasis that they've said, at least from stage, that they want to reduce down some of these timelines. So that'll be key. Looking forward to the bankable feasibility study there at Mont Sorcier. I guess just as we wrap up, Mark, you got 3 projects, 3 jurisdictions, a lot of precious metals focus out of the production profile. Lagoa Salgada will have a lot of precious metals as well as some critical minerals. You've got the iron ore project. Any other final thoughts you want to give listeners as far as what distinguishes Cerrado Gold in the present state, but also just looking forward?
Well, I think what's really important and critical to note is obviously, if you look at based on $2,100 gold, if you look at the PA, we're generating about 25 million of free cash flow in Argentina. With prices up and around 50% higher than they were then, we're going to generate a lot more cash. And these are all US dollars. So the reality is we're going to generate a lot of cash. If you look at our current market cap of about $85 million on a combined basis, 85 million Canadian, that's 50 million US. We're trading at just over 1 times our cash flow generation capability. Plus, we've got 2 superlative projects that are coming on stream that I think Portugal will trade when we bring it into construction. Will trade closer to its peer group at around 0.8 times NPV, which should give shareholders a big lift within the next 12 months. And then on top of that, once we get the feasibility study completed for Quebec, the reality is that we could see a lot of value for that project. And again, this is on top of any potential exploration success we have in Argentina. So we're pretty excited by where we are. We have projects that have the potential to be 3 world-class assets, and we're pretty excited with now the stability and the strong cash flows we have to drive them.
Yeah, Mark, it's really astounding the valuation that you have as far as the market cap versus all 3 of those projects. Any one of them could underpin your market cap and then some. So when you add all 3 components together, definitely a value arbitrage opportunity for people to look into. And we'll definitely keep following along with Cerrado Gold here at the KE Report. For people listening in, if you want to get more information or just follow along with the news flow, definitely click on the link below this interview in the show notes. It takes you right over to the Cerrado Gold website, straight to their news section where you can follow along with all the updates. Mark, keep us posted. We'll get you back on again for another update soon. And looking forward, as always, to our next conversation.
Hey, Shad, thank you very much for you and the K report for the support and engagement that you've had with us. I really appreciate it.